Wall Street's main indexes staged a respectable rebound on Tuesday as fears of a widespread banking crisis diminished and inflation data showed prices slightly easing. The Dow gained 1%, the S&P 500 jumped 1.7%, and the Nasdaq soared more than 2%. After the implosion of Silicon Valley Bank and Signature Bank, contagion fears were allayed Tuesday as reassurances by U.S. President Joe Biden and other global policymakers vowed the crisis would be contained. Financial stocks clawed back some losses, with the S&P 500 Banks Index coming back from its steepest one-day sell-off Monday since June of 2020. And the Labor Department's monthly inflation report on Tuesday showed prices continued to rise in February, but that the pace of those increases slowed moderately from the month before. Even so, inflation has a long way to go before approaching the Federal Reserve's average annual 2% target. Dryden Pence, Chief Investment Officer of Pence Capital Management, says that puts the Fed in a tough spot as it decides how much to raise rates ahead of its two-day policy meeting later this month.
I think they probably would have liked to have continued to move, maybe gone 50 basis points this time, maybe have to back out of that because of the scare around Silicon Valley Bank. And so now they're in this situation of really trying to figure out how long are the real lag effects. So the Fed's got a very difficult decision to make here is, do we keep raising, do we keep pushing until something breaks, or do we try to modulate this a little bit and let the consumer catch up with the Federal Reserve? I mean, nobody told the consumer, don't fight the Fed. And the consumer's still out there spending, and as long as they're spending, we're still going to have inflation.
Among the day's individual movers, shares of Facebook parent Meta Platforms rose 7.3% after the tech giant announced 10,000 job cuts in its second round of layoffs. And ride-hailing app rivals Uber and Lyft rose 5% and 0.6% respectively after a California state court revived a ballot measure allowing the companies to treat drivers as independent contractors rather than employees.
From another crypto bank going under to a plea for more time from Sam Bankman-Fried. These are the week's big stories in the world of virtual money. Another crypto-friendly bank is no more. U.S. regulators stepped in to shut down Signature Bank on Sunday. As of September, almost a quarter of its deposits came from the crypto sector, though the bank had been trying to shrink that figure. Now its collapse follows that of rival crypto lender Silvergate and adds to the turmoil over the meltdown at Silicon Valley Bank. Cornell University professor Saleh Omarova says the failures raise big questions.
What next? And what kind of lesson will the banking industry, the venture capital private equity industry, the tech industry, the crypto industry, and the rest of us will draw from what happened, right? The one lesson that is clear from here is that, look, what systemic risk means is not necessarily predictable upfront.
Bitcoin hasn't suffered amid the turmoil. By Tuesday, it was around $26,000, touching levels not seen since June. Traders say the token benefited after U.S. watchdogs moved to limit any fallout from Signature and SVB. Bitcoin also got a boost from signs that U.S. inflation might be cooling off, and hopes that the Fed could go easy on rate hikes due to the bank dramas. And Sam Bankman-Fried's lawyers say his trial should be put back. They argue the scheduled October date is too soon, with federal prosecutors yet to turn over some key evidence. In January, Bankman-Fried pleaded not guilty to 8 charges of cheating investors in his crypto exchange. More charges have since been added.
The electronics giant Samsung says it plans to pour a massive amount of money into what could end up as the world's largest base for making computer chips, some $230 billion over the next 20 years. According to South Korea's energy ministry, Samsung will build 5 new chip factories at the base and bring in more than 100 smaller makers of parts and of fabless chips, as well as R&D groups. Wednesday's announcement is a key part of South Korea's plan to give its domestic tech sector a boost. Samsung represents the bulk of a strategy for the country to become a major player in a field dominated by Intel and Taiwan's TSMC. It's also part of a global wave of countries trying to shore up their ability to make chips after a shortage during the global health crisis that disrupted supply chains of everything from smartphones to cars. That wave also includes the United States. Last month, the Biden administration released details of its CHIPS Act, a funding plan that offers billions of dollars in subsidies for chip makers that invest in the U.S.